everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so that we can better understand tomorrow. And today, we're taking a look at the EURUSD Forex pair. Now, first of all, as we always do with Forex pairs, we start at 7 o'clock and we look to go from there. Now, today is Inauguration Day, right? We've got Trump hitting the mic and stepping up to plate a little bit later today. So you're expecting that to play a big role on what we see. Now, a lot of traders may choose to just not come in today and not trade at all. Other traders will think, okay, well, I could probably trade, but it's got to be an early in, early out kind of scenario. Get in, take the trades, get out, go home, right? That way you don't have to deal with all of the presidential stuff. So two different mindsets coming in for today's movement. Now, looking at the EURUSD, it looks like a lot of traders chose the first one because there was a lot of movement going on. And big drop lower to start the morning off after the attempted run higher. That massive pop at around 8 o'clock last night didn't really go very far, found a nice push up and a secondary push, and when they tried to come back again, they made a lower high and completely fell apart. Now, that big drive lower, a lot of sellers probably missed this move. If they weren't selling somewhere in here, or I guess even in here, likely they missed a good chunk of this drive down. So sellers are going to be really, really excited about any type of correction that they can get their hands on. And that correction came in the form of right there. Now, this is right around when we're starting off, so it's a little bit early. It is after 7 o'clock, but it's a little early. Sellers will be diving in on that, understanding that it's a very bearish candle. We have a big drive lower, and there's a good chance that we at least make an attempt to go back down to the lows. You might get hung up on the cluster of support down here, but either way, there's a good chance that sellers make another drive. And they did. They got a new low. After that low was made, though, that looks like about everybody and their brother got out of the trade because it hit the low and immediately rocketed to the upside. And that big push to the upside shows us that all of the sellers that were in here, on the way down, sold into this, they took their profit and they got the heck out of the way, because this reversal was no joke. Slamming through the moving average, completely blowing through that high, everything getting smashed out of the way. So with that bullish turn of events in several consecutive bull bars, 1, 2, 3, 4, 5, 6, 7, 8 of them, with 7 of them closing on their highs, right? Very strong bullish sentiment that shows that the buyers are taking control of the market. That's much more than just a correction. This is a correction, right? Back and forth, grindy, big drop. This is a reversal, okay? Quite the difference in the way that they appear. So when we have this big reversal and an attempted bear move down, not by much, that's probably sellers attempting to sell the swing high, thinking, the breakout's got to fail. I don't believe this breakout. I'm going to sell into it and see if I can get it going. When they get that big wick, there's no way they're going to be hanging around to see what happens next. They're going to be exiting. And when they exit, that tells us that, well, the sellers just got out of the way and they tried coming in and they just gave up again. So with the sellers out of the way, that allows the buyers to hit the market and slam it higher once again. Now, the buyers push the market back up, and this is a very aggressive drive higher. Arguably, there hasn't really even been a pullback. There was, but very small. 1 candle pullbacks, 2 candle pullbacks, really, really minute. And that tells you one big thing. The buyers are aggressive, right? But we should also, at some point, see a bigger correction. Just something with a little more substance. And we get that pullback right here. Now, once we start getting that pullback, then we start looking to become buyers again. We're pushing into a potential area of support with monthly support at the prior month high at 65.42 and looking for the buyers to want to maybe even hold the moving average. We get a really, really weak, bull move on that, but it's also inside this bear candle that couldn't go anywhere. So it's a bad follow-through bear candle with a lot of wick on the highs. There are going to be a huge amount of breakout traders that are looking to buy above that, get that move going towards the highs. So it's aggressive, but you can buy that type of formation. For me, I'm not a big fan of that kind of move. I would rather wait for a little more proof. And man, you got that proof on that candle right there. Huge bull move up, closing smack on its highs. You're looking for continuation after something like that. And that's exactly what you got. Nice run back up to the prior high a day, and then we start seeing more resistance. Now you'll notice I have a red arrow up here. Now this is more aggressive, but you do have a wedge forming. right? This wedge forming on the way higher, and they blew through the top of it. Now, whenever you have a bullish formation that breaks higher or a bearish formation that breaks lower, that's considered unsustainable movement. It's a market that it just pushed too far too fast, and chances are it's not going to be able to hold it right then and there. It's going to have to pull back and then see if they want to hold it. Now, that's not always the case. It does sometimes, 20% of the time, break higher and just rocket ship up. Most of the times, though, you get something like this where it blows through the highs, corrects lower to find buyers a little bit farther down, and then makes an attempt at the secondary move. So what you're looking for in this type of scenario is that pullback. You're not looking to stay on this for the rest of the day. You're probably not going to the low a day. You're just looking for a quick little pullback down to support and then reverse back to the long. So aggressive little counter trend scalp there. Generally better to stick with the trend, but I wanted to point it out because I was getting some questions on it. So that's going to do it for today. Hopefully you learned something. Hopefully you found it at least entertaining. And, given the day type, hopefully you traded safe today and followed that plan because, man alive, today is a little bit of a wonky one. And as we get closer to lunchtime and Trump right around the corner, yeah, be careful, right? So again, that's going to do it. If you have any questions, you can always send me an email, jbrink@slingshotfutures.com. Enjoy your weekend, and we will see you all on Monday.